In a year where there's been a record number of IPOs, none have been more eagerly anticipated than Airbnb. Investors have waited a long time for an opportunity to invest in one of the most successful Silicon Valley companies in recent history. The story of Airbnb started when the founders rented an air mattress in their apartment to make some extra money so they could make rent. A novel idea to allow strangers to sleep in your home has disrupted the hotel industry and allowed millions of people to make money by renting out their space and save money by finding cheaper places to stay. As of September 2020, Airbnb has over 4 million hosts with over 5.6 million listings available across 100,000 cities in more than 220 countries. In 2019, there were 54 million travelers who booked 327 million nights on Airbnb. Travelers love Airbnb and return consistently to book again. 69% of Airbnb's revenue was generated by repeat guests who had at least one prior booking. For me, I almost always book on Airbnb because it's usually cheaper and the rooms and experiences are better compared to hotels. I've been excited about potentially investing in Airbnb for a long time, and I wanted to make this video to show you why I believe it's a great investment opportunity. In this video, first, I'll give you my top 3 reasons for why you should invest in Airbnb. Then I'll show you how much I believe Airbnb's stock is worth with my intrinsic value for the company. I'll connect my story to the fundamentals of the company by looking at future revenues, profitability, and growth opportunities. At the end, I'll tell you at what price I think Airbnb stock is a buy and what to expect after the IPO. I think you'll really enjoy this video, so stick around until the end. If you enjoy a video like this one, give me a thumbs up and subscribe to my channel. It means a lot. I really appreciate your support. The first reason why you should invest in Airbnb is because they have a huge total addressable market, which means there's lots of room for growth. Airbnb has raised billions of dollars in capital from venture capitalists to fund growth in a winner-take-most market. VCs like big market opportunities, and Airbnb is going after a huge market opportunity by disrupting the hotel business and increasing the size of the travel market by allowing people to rent their own houses, apartments, and private rooms on Airbnb's platform. While the hotel market is a 600 billion plus market, Airbnb believes their total addressable market is $2 trillion, with $1.8 trillion coming from short-term stays and $210 billion coming from long-term stays. Airbnb earned $4.8 billion in 2019, so there's lots of room for growth. The second reason you should invest in Airbnb is because it's a high-margin business. The median operating margin for the biggest hotels is 14%, but Airbnb operates more like an online booking business. I think the best example for what Airbnb's future operating margin could be is Booking.com, whose average operating margin from 2016 to 2019 was 34%. Airbnb is all in and investing heavily on growth. That's why most of the time their operating margin is negative. However, in Q3 2020, you may have seen a preview of what Airbnb's long-term operating margin could become when they are a mature company and not reinvesting heavily for growth. Airbnb recorded a record 31% operating margin in Q3 2020. Airbnb cut back on costs and especially on marketing and advertising as the pandemic dramatically hurt bookings in 2020. While bookings suffered, a 31% operating margin gives you a great glimpse of how profitable Airbnb's business really is when they can cut down on costs. Later in the video, I'll give you my long-term operating margin estimate for Airbnb. The third reason you should invest in Airbnb is what I call their wildcard opportunity. In addition to booking a space, you can book an activity or experience with a local host on Airbnb. Airbnb collects 20% of the costs of an Airbnb experience. Airbnb Experiences launched in 2016 and offers tours, events, and activities hosted by local individuals and companies around the world. During the pandemic, experiences were paused, but online experiences were launched. The new Airbnb online experiences offers activities like cooking classes, bartending classes, comedy shows, and many other activities where local hosts can earn income despite not being able to meet up in person. Keep in mind, experiences have been a disappointment for Airbnb so far, but Airbnb believes the opportunity is still big, with an estimated total addressable market of $1.4 trillion. Experiences are a relatively new offering, and maybe there could be a breakthrough for experiences with in-person and now virtual activities in the mix. Think of the experiences opportunity as a call option when you buy Airbnb stock. To come up with my intrinsic value for Airbnb, I used a 10-year discounted cash flow analysis. To estimate revenue, I estimated gross booking value, which is a leading indicator of their revenue and represents the dollar value of all bookings on Airbnb. Gross bookings grew at a CAGR of 50% from 2016 to 2019. In my valuation, I estimated gross bookings will grow at a 25% CAGR over the next 5 years and 12.5% from 2026 to 2030. This means gross bookings would be $193 billion for Airbnb in 2030. To give you more context, Booking.com's gross booking value was around $100 billion in 2019, and Expedia was $108 billion in 2019, and I expect Airbnb will become much bigger. Revenue as percentage of gross bookings is usually between 12 to 13% for Airbnb. 13% of $193 billion of gross bookings means Airbnb would earn $25 billion in revenue in 2030. I estimate operating margin at 24% in 2030, which is the midpoint of Booking.com's average operating margin and the median operating margin for the top hotels, which is 14%. Airbnb's margin could be even higher, but Booking.com makes a lot of their money with their high margin ads business, and Airbnb doesn't offer any ads at this point. Still, 24% is a highly profitable company, and it's a number I'm confident in using for my valuation. With $25 billion in revenue and a 24% operating margin in 2030, my intrinsic value for Airbnb is $57.14 per share. In the most recent S1 filing, Airbnb boosted the offering price to $56 to $60 per share, up 20% more than the $44 to $50 per share they originally planned. At $60 per share, Airbnb would be valued at $42 billion. However, I'd be surprised if normal investors like you and me got a chance to buy in at that $56 to $60 fair value range. The reality is, after the IPO, Airbnb's stock price will be controlled by the traders, not long-term investors. Valuations won't really matter in the short term, as the stock price will be driven by mood and momentum. With Airbnb being the most anticipated IPO of 2020, I'd speculate the stock price will jump as soon as the shares are traded on the public market. If the stock trades below $60 per share, I believe it's an instant buy that I'd like to hold for the long term. I think $60 to $70 is a little higher than I'd like to pay right now, but it's a fair value. And anything over 70 is too expensive for me, even though I really like the company. I'd love to be an Airbnb investor, but it may not be right now. If you enjoyed this valuation, I'd appreciate if you like this video and subscribe to my channel. In the comments below, let me know if you believe in my story or disagree. As always, bulls and bears are welcome. Thanks for watching.